Have you ever wondered about the coffee can portfolio? It's a fascinating concept that takes investing back to the basics, but it's not about coffee. It's about an investment strategy that harks back to the Old West, a time when people stored their most valuable possessions in coffee cans and tucked them away under their beds for safekeeping. Fast forward to 1984, when financial advisor Robert G. Kirby coined the term coffee can portfolio, just as those Old West settlers trusted. And the safety of their coffee cans? Kirby suggested investors choose high-performing stocks, put them in their portfolio, and then essentially forget about them for a decade or more. But what makes a stock worthy of the coffee can portfolio? It's all about consistent high performance. The aim is to build a diverse collection of stocks from companies that have consistently performed well over the years. This isn't a strategy for the impatient. It's a long-term game where a decade or more down the line, you'll have a mix of stocks. Some may not have grown, some might have lost value, but the key is that you'll likely have a few standouts that provide a significant return on investment. The coffee can portfolio made its way to India, gaining popularity through Ambit Capital and the book The Unusual Billionaires by Saurabh Mukherjee. Mukherjee's approach focuses on companies that consistently generate a return on capital of over 15% every year, thereby offering a low-risk avenue for building substantial wealth. So how do you build a coffee can portfolio? The key is to focus on the quality of the stock. Look for companies that have been around for at least a decade with consistent yearly revenue growth of at least 10%, a return on capital of 15% for a decade, a market capitalization of over 100 crores. Strong brand value and a competitive edge. It's about quality investing rather than quantity or rapid growth. It's the difference between investing in a trendy startup and a toothpaste company. People aren't going to stop brushing their teeth if the price goes up. When it comes to investing in a coffee can portfolio, there are several approaches. If you have a substantial amount to invest, consider making a lump sum investment once a year. Alternatively, a systematic investment plan allows regular investors to invest a set amount each month. And don't forget the strategy of buying on dips, taking advantage of buying assets when their prices drop, with the expectation that they'll rebound in the future. In summary, the coffee can portfolio is a long-term, low-risk investment strategy focused on quality over quantity. It's about patience, consistency, and faith in the companies you invest in, much like those Old West settlers had faith in their coffee cans. It's a strategy that has stood the test of time, and it might just be the investment approach you've been looking for. And there you have it, the coffee can investing strategy, a fascinating approach that stood the test of time. If you're serious about building substantial wealth with a low-risk mindset, the coffee can portfolio might just be the strategy for you. Remember, it's not about constant micromanaging or reacting to market fluctuations. It's about selecting outstanding companies, investing in them, and letting time work its magic over a solid 10 years. Now, before we wrap up, if you found value in this video, don't forget to hit that like button, share it with your fellow investors, and subscribe to our channel for more insightful content. If you have any questions or want to share your experiences with the coffee can portfolio, feel free to drop them in the comments below. We love hearing from our community of investors. Thanks for joining us today. Happy investing, and we'll catch you in the next video.